Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for Sunday, July the 26th / Monday, July the 27th. I wanted to shoot this one a little bit earlier instead of waiting until Monday because obviously there was a lot of big movements in the market over the weekend, and I had already updated Patron members, so I wanted to do a weekly update for everybody on YouTube and everybody on the free channels as well. So before I jump into the content, please do me a huge favor, hit that thumbs up button, make sure you subscribe to the channel if you haven't already, and of course make sure you check the description for a link where you can join the Patreon. Just $7 a month. That helps to support the channel and helps to get more frequent updates. Right now I'm only doing a couple updates a week because there's only about $400 or $500 coming in off of that Patreon. So it's really difficult to justify spending more time on it than that. But if we can grow that thing up to $1,000 plus a month, then I'll commit to doing 3 videos a week. And of course, as it grows, I'll commit more energy to it. So first things first, what I want to talk about today is this pump, because the pump was something that I don't know if it caught a lot of people off guard. I don't know if it was what a lot of people were expecting. Certainly caught me off guard in some ways, in other ways not so much. If you remember last week, I talked about the fact that I felt like we were in distribution. It felt like we were probably due for some type of what's called a UTAD, or an upthrust after distribution, which is like a wick-off term for distribution. It happens right near the end of it. Basically washes out the bears, traps bulls, and then it proceeds to go down from there. So I had said last week that it wouldn't shock me if the market suddenly pumped $500 or $1,000. I think it actually pumped about $900 since then. But the reason I say it surprises me a little bit is because I didn't get a play on it. I didn't get a long position where I was able to ride it, right? I didn't see any obvious entry point. It was just kind of more of a gut feeling type of thing. And it's, unless you're a gambler, you don't typically trade gut feelings. Typically you trade setups. So I didn't find a setup, which means I didn't make any money on the move, other than what, my hold portfolio went up, which is, a moot point because it's not real money until you cash it out. Okay. But basically, did this pump convince me? Did it turn me into a bull? Did it convince me that the bottom is in? All that kind of stuff. No, it didn't. It didn't do any of that. In fact, like I said last week, I feel like we're in distribution, and I feel like we're probably nearing the end of that distribution. So I'm going to talk about that today, but I'm also going to give you some bullish scenarios so that you're prepared and so that you know what to watch for, so that okay, if this happens, this might actually be a bullish thing, or if this happens, this might just be distribution. All right. So let's start. I don't even know where to start. So I'm going to start with the CME. I haven't talked about the CME a lot lately. But I want to talk about it today because I think it's important. So this is the CME chart right somewhere. I have a lot of charts open. Okay, so this is the CME chart. Obviously, it's the same old story. Bitcoin decided to do this, herky-jerky stuff on a weekend when the CME was closed, which gives us the gap, right? And this is not just a liquidity gap. This is an actual open air gap. This is where price actually opened much higher than where it closed at on Friday. And by now, if you've watched this channel for any time at all, you should know that gaps like to fill. Now, that's a double-edged sword because there's actually another gap that I think it's important to keep an eye on as well as price moves up, right? We do have this gap that most bears have probably forgotten about. It's kind of been in the back of my mind for quite a while, but it's sitting up around this area here. Hard to see because it's a very small gap, but it is indeed a gap. Let's zoom in, you'll see it better. It's right here. It's between this this candle here, this green candle, this open of this green candle, and this open of this red candle, okay? So it looks something like that. And basically that gap lives up around 11.8. See it up there? So you have to be mindful of that because it's absolutely possible that this is trying to fill that gap in, right? And it would still fit the definition of an upthrust after distribution. It could still throw a really big wick up there, have a bear capitulation type of moment, go up here, fill this in, and then still come down, right? And when I say come down, it might be that it's crashing and going to put in a new low. It might also just be that it's having a retracement where it retraces back down and, it's more of a correction type of scenario. So keep that in mind. That gap is up there. It is a legitimate gap, and it's a double-edged sword. Yes, gaps like to fill. This gap here, obviously the price is going to need to move back down to around the 96.65 area in order for that gap to fill. So me personally, I'm expecting that to happen at some point in the near future. Okay, so that is the CME chart. Now, what I do want to point out on the CME chart, and this is actually a saved image from earlier today before the market reopened, is if you are a bull, or whether you're a bear, it doesn't really matter. If you're trading this, you need to be aware of the fact that there is this potential bull pennant in play. And this is a pennant that I talked about a little bit in a few earlier videos, just briefly mentioned it, so I didn't really think it's what it was. But let's be honest, it might be, right? Got to be open to the idea, even if it's not what we think. So the way that would work is if we measure this as a flagpole, basically from down here, it moved up about $6,000. And if this is indeed a pennant forming, and if it does break out north, whole lot of ifs in that sentence. But if it does break out north, it would technically have a breakout target up around 15.6, right? $6,000 breakout target. So is that possible? I think it is possible, right? I don't think it's the most likely scenario, but I do think it's possible. I think it's possible that this market gets like a little mini bull run. You know, the stock markets, I still feel the same way I felt about that since March. I feel like they're being propped up or being falsely manipulated to try to, you know, keep things in order until the November presidential election in the United States. Not to get into politics because that's not my arena, but I think most people would probably agree if there's a major recession in the next couple of months, the chances of Trump getting reelected are going to be pretty low. So I think that he's going to try to do everything he can to make sure that doesn't happen, right? So as long as that stock market is being falsely propped up, I think we've got to say that it's possible that there's going to be some weird stuff going on in crypto as well. All right. I'm going to cover stocks briefly later in this video, and we'll talk about that. But that's my biggest concern with crypto right now, is that it's doing things that it's never done because of this mass level of manipulation in the stock market. It makes it very, very difficult to predict what's coming, right? Because in the past, we knew we could look for accumulation, we could look for distribution, we could look for these very textbook patterns that basically go back hundreds of years with, you know, stock trading and with, you know, technical analysis, not necessarily stocks, but with technical analysis. And they've worked very, very well up to this point. But now we're getting into this, not just manipulation, because manipulation is in every single market, but now we're getting into this really heavy-handed manipulation, and it's making it difficult, right? I remember back here when this fell down to 8,500, I wasn't in a big hurry to buy it because I felt like, hey, I've got time. We should see accumulation if this is the bottom and I can buy in. Same thing here. No big hurry. I've got time. It'll reveal itself. And so when this came down to 4,000 or whatever it was, same thought process, right? I've got time. I don't need to run in there and jump on this thing. The market looks pretty sketchy. Everything on the global picture looks sketchy. I'll wait for some sideways movement and then I'll make a decision. And then we didn't get any sideways movement. We've got this really weird V bottom, which is what you normally get when the economy is really strong, right? And you have tons and tons of consumer spending, you'll get a V bottom in the stock market. Well, there is no consumer spending, so to speak, in crypto. So I think this is just following stocks. And if you go look at a silver chart or a gold chart, well, actually gold's a little different, but if you go look at a silver chart, okay, and we put this on a weekly chart, you see the same V bottom here, right? Same V bottom. If I put this on any chart, you're going to see this V bottom for the most part, okay? Here's Tesla. Big old V bottom, right? Big old V up to a new all-time high, right? Side note, I think this is, you know, one thing about crypto that it kind of, you know, burns my rear end. It's the way people talk about it. It's the way people try to suck in new people to this market. I saw a guy earlier who does webinars and sells courses and stuff on trading and is more of a marketer than he is a crypto expert. I've known him through the marketing world for a decade. And it's funny because he said, you know, oh, if you had put X amount of dollars into crypto back in March, it would be worth X amount of dollars now. And it was like a 3X return. And the thing is that's not true. If you would have put that money in the right crypto, yes, you might be up, you know, a couple $100, 200%. For example, if you put it in Ethereum, you'd be up over 200%. But guys, that can be said for any market. If you'd have put $100, for example, in Tesla back in March, let's just say you were really good, since we're playing this hypothetical game. Well, if you'd have put $100 in Tesla back in March, you could have got a 400% return, which is more than twice as much what you would have got off of Bitcoin, right? More than twice as much. So I hate that snaky, snake oil salesman type of crap that goes on in this space, where people act like crypto is the only place where things go up and that crypto is its own unique animal. It's not. It's just another market to trade. And whether you want to believe it or not, it's doing what the stock market's doing. You go through stocks and you'll see stock after stock after stock making all-time highs. That's Tesla. It had this all-time high back here in February, reached almost $1,000 a share, came collapsing down, and what did it do? It retested its, you ready for this? All-time high. That's what it did. It retested its all-time high, and then it rocketed off of that, okay? This whole idea that I've been portraying on this channel for the last several months, that Bitcoin likes to retest old highs, it's not just Bitcoin. That's what markets like to do. They like to retest previous areas of resistance, and what bulls want to hope for is that they flip those areas from resistance to support. So this is a textbook case where somebody might have had bids sitting on Tesla at this old level of resistance, so that when it came down, they got those fills. And if they did, obviously, if they held on to those, they are up really, really big right now, almost 300% in just a couple of weeks, okay? If we look at Apple, okay, here's another one, Apple. There's that big V, right? Boom, all-time high. When it fell, what did it retest? Well, there you go. Here's Apple's previous all-time high. You see it? That was Apple's all-time high. That was an all-time high from late 2018. When it collapsed in March, it came down, retested its previous all-time high, and up it went for a new all-time high. If we look at what's another big company, Facebook. Now, Facebook's having a lot of struggles right now, right? They've got advertisers mad and boycotting them and all this crazy stuff going on, but there it is. There's that big V, and there it is, the all-time high. Now, this one didn't test its previous all-time high. It actually went quite a bit lower than that, right? Because its previous all-time high would have been right back here, but it was more of almost like a double top type of situation. Not exactly, right? But again, the all-time high, over and over and over again, okay? So it's just weird. It's like this manipulation that's happening in stocks, and it's kind of carrying over to crypto. So I'm not trying to be a cynic. I'm not trying to be, hardcore bearish, because like I said, there is that potential bull pennant, and those things could play out. But I think it's more just a case of manipulation, okay? So anyway, there's that. I wanted to give it to you. It's not very likely, but very possible, and it's only fair you know about it. All right. Let's see what else I want to talk about. So there's the CME. I already talked about that. There's stocks. Talked about that a little bit. We'll talk about those a bit more. There's housing stuff. We're probably not going to talk about housing markets today. Let's talk about the Dow real fast. Then we'll jump back over to crypto, and I'll get real heavy into the charts. Okay. So this is a chart of the Dow Jones Industrial Average. And basically this right here was the bottom back in 2009. So this was the last major U.S. recession, right? Peaked back here in 2007, made an all-time high, okay? Collapse. I mean, just absolutely collapsed from a little over 14,000 down to under 7,000. So more than 50% retracement there, or crash, whatever you want to call it. And then up it went. Now we've got this big V bottom, or this V shape forming, okay? And if you look at retested this old level right here. What was this? This was the previous all-time high, right? Just like a lot of the stocks we talked about. But this back here was the actual all-time high before the last major recession, okay? And it's down around 14,000. And if you look, this up here was just shy of 30,000. So a pullback down to this level would be about 50 to 55%, which is in line with this last recession in 2008, okay? It's also suspiciously close to the 61.8, the 65 zone, that golden pocket zone. So me personally, I'm still looking at this stock market as a bubble that has popped. that this was the top back here, that this was the first leg down, or what some people would call an A leg, that this is the B leg or complacency leg, and that what comes next should be the C leg that takes us back down to the golden pocket area and also to retest this all-time high back here. Now you might be wondering, James, if this is a crypto channel, why are you talking about stocks so much? And some of you know I talk about these occasionally, but the reason I'm talking about it so much today is because, guys, with this breakout, a lot of people are going to turn bullish, and you're going to see it everywhere. And you're going to see a lot of the bull nonsense. And I'm not just talking, when I say bull nonsense, I'm not talking about bullish posts, right? There's some legitimate bullish posts out there. I'm talking about the stupidity that comes with the bullishness, right? The euphoria, the we're all getting rich, the, you know, you'd be crazy to sell type of post. Listen, that is indicative not of a new bull run. That's indicative of euphoria and complacency. That was the same stuff that we saw in early 2018 in crypto. It was the same stuff that was everywhere, so much that I took $95,000 out of my bank and stuck it into the market thinking I was going to get rich, right? I've been doing really well trading, but I got greedy, I got impatient, and I didn't want to miss the next major bull market, so I put that $95,000 in, and unfortunately for me, it was the complacency stage, and I was going to soon learn a very difficult lesson about what happens when you try to chase markets down, right? Ended up losing the majority of that $95,000 and having to make it back the hard way through actual trading versus just sitting on my money, okay? So with all that being said, the reason I'm pointing this out is because if this market, if Bitcoin is following this market, and if Bitcoin followed it down in March, which it did, and if it followed it back up over the last 4 months, which it has, if this turns around and ends up being a C leg incoming, and it goes down to retest this 2007 high, what do you think is going to happen with Bitcoin? Do you think that Bitcoin is going to suddenly decouple and continue north? Maybe. Or is it more likely that Bitcoin is going to follow that stock market right back down to retest its old all-time high, which is down around $1,000 or so, right? I know that it's weird because you guys are probably sitting here thinking, wow, even when this thing breaks 10K, even when this thing pumps, this guy still finds a way to present a bearish case. I'm just presenting the reality of the situation, right? I'm not saying it's going to go to $1,000. I don't have a crystal ball. I don't know if it's going to go to $1,000. What I'm saying is, because this is what I expect with the stock market, that's why I'm still bearish with Bitcoin. It's not really the Bitcoin chart that makes me bearish. It's the global economy. It's the stock market. It's looking at all these markets and seeing them break all-time highs and break these really important key levels. Silver, for example. And guys, I loaded up on silver, right? I bought a bunch of silver ETFs back in March when they collapsed. I was in at around $13.38 on average. I sold those last week, right, for like a 49 or 50% profit. And I bought a bunch of silver bullion that, I won't sell. I'm holding it for decades and decades, right? In a safe place, not at my house, obviously. So when silver is going up, I'm not losing money. It's good for me, but I still look at it with, common sense and say there's something weird about this right here. And silver is now up at its highest point since 2013. Look at this, almost straight up, that same V, right? It's just weird. It's weird for all of these markets to be doing this while the economy is doing what it's doing, while we are looking at record unemployment, while we're looking at businesses, being partially shut down or shut down completely in some cases, while we're looking at, all these people who were living on these extended federal unemployment benefits, and now those are running out at the end of July. Just, it's really weird. It's really weird, guys. All right. So let's look at some more charts. But again, I just want to point out that my bearishness is not so much chart related as it is economy related and global, I guess, fundamentals, if you will. All right. So if we are looking at this is what has my attention. I'm going to actually pull up a paint because I already did this earlier in the day and it's easier to explain this way. So this is a chart of Bitcoin. Screenshot was taken early today, right? And when I said earlier this week that I thought we might get what's called a UTAD, that's the different schematic for distribution. It's where you basically get this pump right in this phase C that goes higher than your initial pump, right? really, really throws people off. I still think we might get that, by the way, okay? But right now, the way I look at this, and I'm not a wick-off trader, I'm not like a wick-off expert or anything, so just take it with a grain of salt. I will say this, I used these schematics quite a bit last year. This is a big reason I was able to predict the top within some certainty, right? I wasn't like spot on or anything, and I had to adjust it as prices moved and all that kind of stuff. But you know, it's one of the reasons that in June and July of last year, I was bearish and I was short on Bitcoin, whereas most people were still talking about, you know, this being a new bull market. It's because it looked like distribution to me. All right. So if this is indeed distribution, it lines up fairly well with this chart. You've got the point of supply back here. You've got the buying climax. You've got the automatic reaction. You've got the strength test. You've got the SAL, which is a sign of weakness. Not exactly the same as the schematic, right? I'd like to see this go a little lower. But then you have this upthrust. You have this consolidation through here, right? And then this would be the last point of supply. This is basically testing the demand of the market, right? And if this, you know, a couple things can happen here. This can completely fail and it can start going down into a markdown phase, right? Which is where you're going to not necessarily crash, right? Doesn't mean it's crashing to 2,000 or 1,000 or anything. You can get a markdown and just mark down. You can go back down, for example, and test the 200-day moving average. You can go down and test the 61.8. You can go down and test all sorts of levels, all right? That's completely possible. But what often happens is people start shorting here and the market keeps doing stop hunts where it keeps pumping up, and that's what actually creates that upthrust after distribution. That's what makes this actually go higher than this back here, right? That's what could potentially push this thing up and fill in that gap at $11,800, right? Would be a whole series of stop hunts on bears. So, you know, the way you want to trade this type of stuff, and I'm not giving you trade advice, but I'm saying, like, if you go read books and things, what they'll tell you is wait for the trend to break, right? Wait for that trend to break, wait for it to, you know, have some type of bearish retest before you get early. Because if you start shorting on this stuff at 9,910 grand, it might work out, or they might hunt you until this thing goes up another $500, $1,000, $1,500. All right. But I do think this is distribution. That being said, be aware. Okay, a couple things to be aware of, but be aware that oftentimes distribution is actually a disguise for reaccumulation. So oftentimes you'll see something like this and think, oh, it's distribution. But what's really happening is big players are reaccumulating and it's actually getting ready to go up another leg, right? Which again is what we would see if it, you know, plays out as a bull pennant and pumps up to 15, 16 grand. This would, you know, in hindsight, everybody will say, well, yeah, that was, you know, of course that was accumulation. But right now I lean toward it being distribution, all right? We still have those liquidity gaps, if you guys remember those. One exists down here, right in this area here. And we still have a liquidity gap right here in this area here, right down around 7,800. So both of those look like targets that I want to watch out for, that I would expect to fill at some point. But we're talking macro picture with those fills. When you're looking at the zoomed in picture, to me, this looks like a really clean channel, right? You've got your line up here, your line of resistance, and then you get your line of support. It's a very nice looking parallel channel. So as long as it's inside this channel, that's what I'm going to be watching. I'm going to watch and say, does this midpoint act as resistance? Does this point act as support if it goes back down there? If it gets up here, does that act as resistance up there? So on and so forth. And the suspicious thing about this is look at the timing of this. If it were to just creep and crawl all the way up to 11,800, 12 grand, it would be out towards September, October, right? Suspiciously close to the election time, okay? So I'm not going to say that's impossible for sure. I still think it's, you know, a very dangerous thing to try to guess which way this thing is going over the short term, meaning in the next month to 3 months, even 6 months. Very, very difficult. Macro-wise, I'm still a bear, meaning that I still think we're probably going to take out this level. I still think we're going to go lower. But that doesn't mean it can't go higher first. Doesn't mean it can't go 11, 12, 13, 14, 15 grand even first, right? Now, again, I'm not trying to talk out of both sides of my mouth like a politician. You know, I am very firmly a bear on the macro picture. What I'm saying is, you know, for lack of a better term, to steal a quote, markets can stay irrational longer than you can stay solvent, right? We don't know how long this is going to take to finally get where it's going. And in all fairness, there's no guarantee that it will ever go back down. This might be the calm before the next bull market. I just don't believe that, right? So, which is why I'm so firmly in my beliefs that, on a macro level, I'm bearish. Let's look at a couple of other charts here. Obviously, this is the 3-day chart that I've talked about over the last couple of weeks. We did get a nice break outside of this falling wedge, which is indeed a bullish pattern, right? What I don't like about this is the fact that there's no real volume backing up. We're not seeing a big uptick in volume. We're still seeing very low volume. This is the same type of volume that we were getting way back here, right? In fact, way back here even, right before this thing collapsed. So I'm not loving the volume. Also, the other thing that I'm not loving about this is it broke outside the smaller range, but it's still trapped inside the bigger range, right? What this actually did was come up and test the close from back in May, right? That's what this did. This May 30th 3-day candle close right up there around 10.2. This came up and tested it. It didn't break out of that range. It's still the same range that it's been stuck in, okay? Now that being said, I do like this W for the bulls. I like that. That's a really pretty looking W. I like this W down here, right? I know it's not exactly a W, but I would call it a W, right? I like that, sitting on top of the support. When I go over to the weekly chart, it's circled because I had showed this to Discord a few days back, maybe 3 or 4 days back, talking about this. This is a W in my mind on RSI. It's sitting right on top of that bear market box. Looks bullish to me. This is a W in my mind. If you put it on a line chart, it's easier to see. See, down, up, down, up. Looked bullish to me, right in the short term. Again, doesn't change my macro view, but short term, it did look bullish. Also, I think it's worth noting that it's broke out of this 2017 resistance. This resistance started back in December of 2017. It's got a clear close above it. That's the first close above that line, right? In 2.5 years. So there are things here that are painting this bullish picture. And I really believe that if it wasn't for COVID and it wasn't for the stock market being crazy and economy and all that stuff, I think I'd probably be bullish on Bitcoin just looking at the charts. I mean, I'd wait for a proper entry, obviously. I wouldn't just chase it down. But I think I'd be more bullish because I do see a lot of stuff in the charts that look good. But when I take it and look at it against the global backdrop, not so much, okay? Just not so much. So, and again, the volume's another thing that troubles me. See how the volume's getting lower and lower? Typically, one of the easiest ways to see the end of a move or to predict the end of a move is to watch the volume dry up. And this, if price is falling and volume is falling, your price is normally going to turn around and go back up. And if price is climbing and volume is falling, your price is typically going to turn around and go back down. Again, doesn't mean it's going to crash. It could just be a simple correction, right? I don't have a crystal ball on this stuff, okay? And I still don't think it's impossible that, the bottom is in. I don't think it is in, right? But I want to be clear and say, hey, it's totally possible the bottom's in. It's totally possible that I'm just wrong and this thing is going to, continue going up. Or it's totally possible that I'm wrong and that the bottom is in, but it's going to correct back down to this, $6,300, $6,400 level, right? Retest its 200-week moving average, which is currently sitting right around $6,300, and move up off of that, right? I've thought about this a whole lot over the last couple of weeks. The longer they can extend the stock market and things like that, I basically look at it like this. There's 2 scenarios. One scenario is they extend this thing out to the election, and we all find out that COVID-19 is basically a really bad flu, for lack of a better term, right? That's one scenario, that we find out that there is not going to be this horrible second wave, and that really is basically a bad flu. And a lot of the statistics right now are pointing to that being a very possible scenario, right? And I'm not downplaying the risk, by the way. You guys know, if you watch the channel, that I was like hardcore about being safe and taking precautions and all that kind of stuff and waiting for the data to come in. But the data is coming in, and we're seeing that the death rate is not near as bad as what they claimed it was. We're seeing that most people who do die of COVID-19 have other health conditions that are fairly serious in nature. Not, I had a cold last week, but like really serious stuff. So I think that's one possible scenario. Maybe we find out that COVID-19 was blown out of proportion and that the market doesn't crash. The market says, hey, we're good, and just keeps going up, right? The other scenario I see is where we get this thing propped up to November. we do get a horrible second wave where lots and lots of people start dying from some type of mutated strain of COVID-19, and then obviously the market completely falls apart. Which one do I want to happen? I think it's pretty safe to say that I want the first one to happen, obviously, right? At this point, I would gladly be wrong about all this stuff, right? And gladly be wrong about, the bottom not being in and all that kind of stuff, because frankly, it's really tiresome to wait. It's very difficult to wait. You want to buy your spot. You have your mind made up that, hey, this is how much spot I want, and you want to buy it. And the longer you wait, the harder it is to wait. And eventually what happens with most people is they capitulate, right? So like here, it's like people, don't want to sell, but eventually it gets so painful they sell. Same thing happens to bears. Eventually it gets so painful they say screw it and they buy. And that's usually when the market turns around and dumps, right? Same thing happened back here. The market dumped back down around 10 grand or so. Bears were like, no, it's going lower. And then it pushed back up to, 17 grand. A lot of bears got trapped in here because they're like, oh my God, I got to get back in. And then it fell, right? So I'm waiting. And as you guys know, I have the hedge fund little HODL portfolio, whatever you want to call it. It's made up of a series of alts in Bitcoin that I don't trade, just in case I am wrong, right? I look at it almost like a lottery ticket, to be totally frank, right? If the market goes completely crazy, someday that, little HODL portfolio should be worth 6 figures or multiple 6 figures, maybe even 7 figures if things get really crazy, right? So that's kind of my get out of jail free card, if you will. But as far as trading this stuff and as far as putting more investment money into it, I'm just not there. I'm nowhere near that point. I would much rather be holding cash or gold. And that says a lot because gold's testing its all-time high, which is normally not a place that I would want to be buying gold, right? So let's talk about gold real quickly, and then I think I'm going to wrap up, guys, because it's going to be a little over 30 minutes in this video. So gold, right? Gold being high is another reason. Oh, well, look at that. 1920.94. Gold just broke its all-time high. Literally just broke it in the last few minutes. Let's see. Yeah, within the last 10 minutes. Gold just broke its all-time high. So why do I care about that? How does that apply to crypto? All that kind of stuff. Well, here's why that applies to crypto. Because gold typically pumps because of fear in the market, right? And I'm not talking about one of those, when others are fearful, be greedy type of things. I'm talking about like there are people moving to gold, right? Because of the global economy and because they're afraid to keep their money in cash. And, for all these things, it acts as a hedge. So typically you'll see gold pump like this right at the start of or right after a major recession begins, right? Right before or right after a major recession begins. So again, gold being high is good for me in the fact that I hold some gold. It's bad for the market in the fact that it's almost like a barometer saying, tough times might be coming. Other than that, this was a beautiful chart though. Look at this. Hindsight's always easy to see this stuff, but look at that. Almost looks like a giant ascending triangle. Almost looks like, 5 or 6 years of accumulation, right? Which is what I want to see in crypto. Is some real accumulation, some real sideways movement like this versus what we're seeing. But yeah, the fact that gold is pumping is, it's a really indicative of, what's, the world temperature is like toward markets. The other thing to be mindful of is the dollar index, which basically measures the dollar's purchasing power against its major trade partners. The dollar is losing its purchasing power, and most people aren't even aware of it. Your everyday people that are walking around the street have no idea that the US dollar has moved as much as it has. They're all happy about their stocks going back up. They're all happy about their housing prices going up. They're all happy about all these things. But what they don't realize is it's not so much that all that stuff went up. I mean, it did. But part of that is just that the dollar has lost value. So, for example, since March, when it peaked, the dollar has lost about 8.7% from peak to bottom, right? Now, in crypto, we're used to those types of moves all the time, but we're talking about a major world currency. and pretty sketchy stuff, right? And it looks to me like it wants to lose more. Will it? I don't know. This is starting to get way outside of my wheelhouse, but I'm watching it. I'm watching it very closely because you guys know I love to look at trend lines. I'm a big trend line trader, right? And when I draw trend lines, I get something that looks like this. I get a trend line like this, or if I'm going from close to close, I get a trend line something like this, right? And on the RSI, I get a trend line like this. So if it breaks through that line in the RSI, that dollar might keep on a falling, right? Me personally, I don't like watching my currency that most of my liquid wealth is in, right, lose its value. Also, side note, if you look, this was another really beautiful example of resistance being flipped to support. This was not the all-time high, but when it did collapse back in January 2018, it did come down and retest its previous level. So, it's one of those things. I mean, the dollar has been losing its value, and life hasn't been that rough. So maybe it's not that big of a deal. Maybe it's not really worth worrying about. I worry about it. When I say worry, I don't sit up at night over it, but I do pay attention to it. It does, it does concern me that the U.S. dollar is losing value, that it's losing, almost 9% of its value, at least measured against other major currencies. Okay. So all these things are like this one giant picture. That's why I was looking at housing markets today, not, like real estate, but like housing markets. Like this is an index that has to do with the housing sector, and trying to get an idea of what houses are doing and whether or not we're coming up on another housing bubble, all this kind of stuff, right? I had this scary idea in the back of my head that we're trying to get into a bubble on the housing situation at the same time that we're going to see a financial bubble, and that things are going to get even worse than what I might anticipate. So just watching all of it, okay? But as far as crypto goes, like I said, I'm still a macro bear. That has not changed. I still believe firmly that this thing is going to move back down. I have no intention of investing in $10,000 Bitcoin, but that's easy for me to say because I do have that hedge fund where I have a few Bitcoin worth of cryptocurrency. So if I am wrong, I do have that, whereas a lot of people don't. So I understand that. But I also believe that right now there's nothing in this chart that makes me think this is going to turn around and go immediately down, right? We are in this very beautiful channel. We've broken some key levels, and I think it's entirely possible that this does go up and try to test the top of this channel, or at the very least, try to test this back here and really throw people off this 10.5 level, to trap some bears and, trap some bulls, right? So for me, game plan's going to remain the same. I'll probably quietly sit on the sidelines unless I just see some magical setup, because I'm not interested in trading a low volume market, right? There's too many other markets out there with high volume and high liquidity for me to get trapped trading this thing on these intraday moves right now. So that's where I'm at, guys. I hope you enjoyed this update. I know it's rather long. I'm going to try to do some light editing on it, but I'm not going to do heavy editing because I don't want to watch the thing 3 or 4 times looking for mistakes. So if you see a mistake, I apologize in advance. And if you see something that's somehow a glaring mistake that needs to be corrected, feel free to leave a comment, and I'll do my best to correct it. Okay. With all that being said, please remember that I am just some guy sitting in a spare bedroom. Nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, or precious metals, or real estate, or anything else for that matter. All right. I hope you guys enjoy it. Please make sure you give it a thumbs up if you haven't already. Please make sure you subscribe to the channel, and please make sure you leave me a comment. That helps me out drastically. This is James with Crypto Common Sense, reminding you all to please trade safe.